Oh God, when I step in that water.
Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is December 29th, 2018, almost the end of the year. Man, this year went by fast, I tell you. Shout out to my man Ryan for this song request. I've never heard of this dude, Foggy Raw. I hope I'm saying that right. He's got a song called Harry Potter, so that's what we're rocking out to today. My man sounds like he's on some Xans and drugs and all types of stuff. But hey, thanks for the song request, Ryan. You send it, I play it. But what's good, people? Hope you guys are doing well today. We're going to be talking about two articles that I found interesting for this Saturday. One being this group called wallet.fail. They're a hardware hacking group. They found some vulnerabilities with the Trezor and Ledger hardware wallets. The crazy thing is they came out with the vulnerabilities first before actually going and talk to the company. So we'll take a look at this article, and I'll have some suggestions for you guys regarding mitigating your risk with any form of crypto storing. So we'll talk about that after we read the article. The second article is out of Decrypt Media. I love Decrypt. They do some excellent articles about cryptocurrencies. This one is about cryptos being eaten up by the FANG stocks, and not in the way of performance, but more so people just gravitating toward their forms of cryptos. You know, Facebook recently just came out with a press release saying that they're working on a cryptocurrency that, you know, it's been rumored for maybe almost a year now that they were working on one. And I'm sure Google's working on something. I'm sure Apple is working on something as well. So this article is talking about how the masses is just going to give up on the decentralized versions of cryptos and adopt what these companies bring to market. And they have a very compelling argument in this article that I want us to talk about and discuss and just get the gears moving about the future of cryptos, because you got to look at all sides of this game and all potentialities. But before we get into things, I want you guys to jump over to cryptoblood.io. That Big Mex automated trading bot is still cranking along. It says up over 276%. We're really up over 309%. I just don't have time to update this graphic every time it moves up or down. So yeah, that's where we are though, year to date. And over 100% in the last month or so. So crazy performance from the algo. Very satisfied with that, and so are all of the members. I've just actually added EOS as a beta algo for the group. So I've allowed people to sign up for the beta program within the membership. It's no additional charge to trade the EOS versus Bitcoin pair with the algorithm I have. It's in beta right now because all I have is 3 months worth of back tested data. And that was essentially the last linear contract that just expired. So we're now trading the January through March contract now, the next 3 month contract on BitMEX with that algo. And so we'll try that out for maybe a month or two and see how performance looks. And I'll be able to compare what snapshot I have of the previous 3 months and compare it to the next 3 months of performance. 6 months will give me a decent amount. I like to see a year of back test data, but it's looking good though. Looking good so far with the EOS versus Bitcoin algo as well. And lastly, the Ethereum will be launching. That's what I'm working on now. That is a perpetual contract, so that will allow me to back test for over a year. So once that's done, I'm going to launch that, and that will be officially a part of the trading pairs available at no additional charge either for the trading room members. So check it out, cryptoblood.io, or I'll leave a link in the description of this video. Let's go ahead and take a look at that market cap. We're currently at $131 billion. Nice bump off of the lows, which actually, ironically enough, I drew this in my last video. I didn't do my two Satoshis yesterday, but on Thursday's video, I drew a line and showed you guys that it was going to bounce off of that. And sure enough, it did. So looking good there. And we cleared The last two to the left, two to the right, which was 129 billion, and then we have cleared also 131 billion on the market cap. So this is a strong bullish move in my opinion, and I think we'll start to go back up to test the 145 area, but we could have a head and shoulders forming here too. I'm just looking at that. So we've got a left side of the shoulder, and possibly if we don't make new highs, will be the right side of the shoulder, and the head would be right here. So that is something we have to keep in mind and just pay attention to so far. But as you can see, that line I drew, look at that. We literally traded at that line, and then we kind of traded in between my first trend line I drew, and boom, we had to make a decision because we were getting to the end of this region here between those two trend lines, and we shot right up. So we took profit. We've got maybe 10% of our trade left, as I said in my video on Thursday. 36, 33, I think it was around the point we took that last percentage off. So we only had 10% of the trade left. We'll let the algo just close out the rest of this trade. And so, hey, we did good. We locked in a lot of those profits on that trade, on that short from 4,000. So we'll see what happens there. But again, we got to just keep an eye out for this head and shoulders, this area right here. And we're right now at this area. But I think personally, we'll keep this trend line and just head on up and test the 4,200 area again. That's the ultimate level we need to pass, and I think we will soon enough. First article out of Bitcoinist: hardware Bitcoin wallets hack, the importance of responsible disclosure. So it says here, following yesterday's article regarding vulnerabilities uncovered in hardware wallets, both Trezor and Ledger have called foul play over irresponsible disclosure. Hardware hacking group wallet.fail, who exposed the security issues, at least partially deny this claim. It says here, in the security world, hackers generally only go public with their findings after giving companies time to patch the vulnerabilities. Disclosing potential methods of attack before vendors have addressed them leaves users exposed to unnecessary risk. Wallet.fail's presentation at the 35C3 security conference appears to have struck like a bolt from the blue. However, Trezor was clearly unaware of the vulnerabilities, as their CTO leaped straight onto Twitter to say so. He found out about the issues with the rest of the audience, so explained that the issue would take some time to fix. And there's his tweet there. Yeah, that's crazy. However, he later tweeted that he had a constructive 2-hour discussion with wallet.fail regarding the vulnerabilities. He certainly seemed a lot happier following the outcome of this meeting. Ledger was also quick to respond, pointing out in a blog post that wallet.fail had not followed standard security principles. However, Ledger also called into question the practicality of the vulnerabilities outlined in the presentation. It specifically pointed out that the group did not extract the seed or pin from any device, a not too suitable reference to its competitor Trezor, perhaps. In addition to the RF side attack on the Ledger Blues pin, wallet.fail detailed an attack utilizing a device hardware implant and compromising PC software to authorize rogue transactions on a Ledger Nano S. The blog post pointed out that both of these attacks require far more effort than simply installing a spy camera to discover a user's PIN. A further vulnerability involved bypassing the MCU check to flash and execute unsigned firmware. In any case, the MCU does not allow access to the PIN or seed. Wallet.fail claimed to have advised Ledger about this issue months ago, and indeed, Ledger says this has already been patched in the next firmware update. So, I don't know, guys. Nothing is foolproof. Nothing is hack proof. I just suggest spreading your funds on multiple devices. Do paper wallets. Go look up how to create paper wallets. That in itself is probably the safest way, right? If you do a paper cold wallet, you can't beat that. The only problem there is the paper actually being set on fire, lost, or destroyed. But you've got ways of securing that as well. So have your funds spread across multiple devices in different methods so that, you're not all eggs in one basket type of situation. Definitely want to spread your risk as much as possible, because there's nothing that's fully fail-safe, in my opinion. At this point, at least, there isn't. So you guys let me know, did you know about this? One of my subs in the trading room actually dropped a link about this. I think it was Crypto Oyster. He dropped this in there. And yeah, this is crazy. Definitely crazy. Second article out of Decrypt Media: why crypto will be eaten by Facebook, Google, Amazon, and Apple. Wow. Let's take a look at what this guy says here. Thomas Power might well be the most connected person in crypto, an influencer who can send stocks flying in either direction with a mere tweet. He's consistently top 10 on the Rise.global crypto influencer list and currently nestled comfortably between fellow blockchain expert Andreas Antonopoulos and Shapeshift CEO Eric Voorhees. He said a good dousing in history and religion is a prerequisite to understanding crypto, says Power. The correction we're seeing, the bursting of the crypto's bubble, is a mirror of the dot-com bust of 1998. Just as the survivors of the 5,000 dot-coms that were around 20 years ago can now be counted on two hands, 99% of crypto ICO projects will go bust, he predicts. All we've done over 20 years is swap the word e-commerce for blockchain, .com for .coin. Meanwhile, he says, our deities are sporting rainbow t-shirts instead of robes. Power sees Ethereum co-founder Vitalik Buterin as a high priest on the altar. And I quote here, I saw Vitalik last Monday night and it was like Jesus Christ walking into a room, Power says. It's a fairy tale story. That's why I think he's perceived to be Jesus Christ, because he's written the Bible for geeks. And what a clever thing, an operating system that creates a financial marketplace for geeks to raise capital and fund their ideas without touching the traditional public markets. But the crypto faithful should prepare for what's likely to be the worst nightmare, because despite all the libertarian ideals that pepper crypto holy land, Power believes that Ethereum, along with everyone else, will eventually sell out to the big companies that already control the web. Fleshing out his thesis, he compares the Ethereum platform with the evolution of Android, going all the way back from its roots in 1969 as an AT&T operating system, Unix, to its eventual acquisition by Google. Ethereum looks terribly like Android to me as an idea, a platform, a system, effectively an operating system, with the killer app being the ICO. Unless they have an exit strategy as part of their plan, Power thinks young crypto founders vastly underrate the strength of the FANGs, the acronym for the 5 high-performing technology stocks in the market, which was coined, I must add here, this is my own addition to this, was coined by Jim Cramer from CNBC. He says you can't compete with something like that. You can't take them on with your little startup. I think decentralization is a fairy tale. Google and Microsoft are already there. What we are heading towards, Power says, is something like centralized decentralization. You'd be forgiven for thinking that doesn't have quite the same disruptive ring to it. But Power believes that this is what people want. Power says we live in an institutionalized world where we don't really trust decentralization. He explains, we talk about libertarian freedom, but people don't really want it. He offers an example, Brexit, which is currently tearing the UK apart at the seams, with over half of the country wanting to remain tied to the central body, in this case, the European Union. He's telling the truth, people. Many people don't really want decentralization and anarchy. I'm sorry. They just, it's a fairy tale, like he said. I'm sorry, especially like the anarchist type movement. Because with anarchy, it's like, okay, if there's no government ruling, then that means you better have your stuff in order. And what I mean by that is you have people that are vultures, that are wolves. And listen, if we come with those guns and we're taking your stuff, there's no one to help you. So, I mean, it sounds good on paper, But I don't think most people really want to have a fully decentralized system where one situation, one bug can just wipe out everything. I don't think that's realistic. I really don't. So you guys let me know your thoughts on that part. But I'm going to finish up this article and highlight a couple of key points in here. Power goes on to say here, let's say Zuckerberg launches Facecoin and you get a coin for every like and every share, every listen, watch, invite, photo, event, etc., and you can redeem those face coins at the Facebook marketplace. And all of this effort is going into reducing plastic waste and using seaweed packaging. Power sees this type of scenario as signaling a positive intention in contrast to the issues of anxiety, privacy, and other downers the big brands are currently battling. It goes on to say here, and as regards to their prospective blockchain partners, Power says there's already a good indication of which crypto startups are most likely to be gobbled up along with the plastic bags. The main thing to look at, he says, is not the market cap, but the liquidity, how much the token is traded. The more it's traded, the more people are interested in the stock, for better or for worse. On the crypto compare sites, if you sort them by liquidity, trades in the last 24 hours, those top 20 are likely the ones that the FANGs are going to eat. Wow. But Power still thinks there's 5 years or so left to wait before blockchains emerge at scale. Wow. What do you guys think about that? Again, and I've seen this personally, just from me being in cryptos for the last 6 years. I've seen my perception of what's going to happen change. I've seen the industry change. We were, in the earlier days, at least when I got in, it was very rose colored glasses for sure, because we thought that we were going to be able to take over government with Bitcoin and start our own industry, start our own ecosystem. And you see that's not happening, especially not with Bitcoin. It's not. It's being integrated into the traditional markets already, right? So, I guess you just got to be more realistic about the outcomes of, these projects. What does the end result look like in 5 years? Are we really going to just eliminate the banks? Are we really going to eliminate Facebook, Google, all of these? Probably not. Facebook may implode on its own, but you get what I'm saying. I don't know, man. You guys let me know your thoughts about that. That doesn't mean that there isn't money to be made in this blockchain industry. Absolutely. We're at the very ground levels. We're at ground zero with regards to Bitcoin, blockchain, and all of that. So I'm not saying that. It's just that some of those grandiose ideas of, this technology replacing things in the way we see it being replaced is probably not going to happen. You guys let me know your thoughts about that. I love reading from Decrypt Media. They have some really good articles they write over there. But that's pretty much it for today. Want to give a shout out again to my man Ryan for that song, Harry Potter. Make sure you guys like, share, subscribe, click that bell, all that good stuff. And that's my 2 Satoshis for December 29th, 2018. I'm out of here. Holla.
Timothy, why ain't